네, 이어서 투자 세션의 두 번째 발표자이신 인피니티 벤처스 크립토의 파운더 파트너이시자 YGGC의 코파운더이신 브라이언 루님을 모셔보겠습니다. 블록체인 인베스트먼트를 주제로 발표해 주실 텐데요. 무대 위로 올라와 주세요.
Hey guys, how's it going? My name is Brian Liu, and Hey guys, how's it going? My name is Brian Liu, and I am the general partner at Headline Asia. I'm also the founding partner at IVC and the co-founder of YGGC. So let me tell you guys a little bit about our fund. Headline is a 4.5 billion AUM fund that spans across 4 regions: North America, South America, Europe, and Asia. And Headline, we are a Web 2 focused fund where we are investing in a lot of equity and not tokens. So we do some Web 3 investments in Headline, but most of it is done through equity. Whereas our crypto fund, IVC, it's about a $100 million fund. It was started a year ago, and that one is dedicated to only investing in tokens. So these are some of our selective investments that we do out of our Web 2 fund. We have a few verticals: fintech, consumer, and software. A lot of our fintech investments that we have done a lot of it is in stuff like robo-advisory. We do a lot of Web 2 salary loans, and we are now looking into QR code payments in China. Some of our consumer investments, Farfetched, GoPuff, Groupon, RealReal, those are some of our investments that we have done about 10 years ago. Groupon, it's one of the first investments. And then some of the software investments that we've done is Honeycomb, Lucid, and Segment. Now, some of our investments that we've done in IVC, we focus on 3 areas: GameFi, DeFi, and infrastructure. So on DeFi, we actually think that it's more into, for DeFi, we are actually looking at more fintech investments. Just because with DeFi, we're not too sure where the industry is going. So most of the Web3 investments that we're looking at right now in DeFi are actually focused on fintech. So IVC is actually known as a GameFi fund because of our affiliation with YGG, but we have done quite a few infrastructure and DeFi. So right now, probably about 40% of our investments have been in GameFi, whereas about 20% of our investments is in DeFi, 20% in infrastructure, and about 20% in Web3 and Metaverse. So what makes IVC and Headline different from most of the other VC funds out there is because we do a lot of venture building. What is venture building? So for us, because we have 4 regions, North America, South America, Europe, and Asia, that we have offices, for example, if our US team and Europe team invested in Groupon, and Groupon wants to expand out to Asia, what our Asia team does is we'll go in, we'll build a team, we'll hire the team internally, and then we'll run it. And then what we do is after about 2 years, we'll sell it back to the parent company. That way we can help companies like Groupon, Farfetch, and RealReal expand out to Asia quite quickly. So when we started IVC last year, we decided to bring that same mentality to our Web3 fund. So what does that mean? Most of you guys have heard about YGG. YGG is one of the largest guilds in the world right now. So during the crypto pandemic, they actually had a hard time expanding outside of the Philippines. So they let our team, since we have offices throughout Southeast Asia, they let our team in IVC go out and build YGG SCA for them. After that, we started doing it with XLD, MetaOne, and Rsong. Rsong is actually the project that was done by John Legend. I don't know if you guys have seen it. They announced it probably about 6 months ago. It's John Legend's first NFT project, and we were the ones that actually helped them with their tokenomics and helped them with their business plan. So the winter is here. We are in a bear market. And you know, starting beginning of this year, it was pretty good. We had all-time highs, but since the beginning of this year, it has been pretty bleak for everyone. When we first started investing, this fund, which we closed the fund in February of this year. The times were so different from investing then to investing now. During that time, we had companies tell us, hey, if you guys don't make a decision or tell us how much you want to invest now, we're not going to let you invest. It was very, very founder-friendly times at the beginning of this year, where pretty much every VC was going after the same deals and was just throwing money at anything that they saw that was remotely, that they thought that it would be a good company. During that time, we had companies that were 3-4x oversubscribed. We had founders that were doing valuations of 100 million, 150 million with no revenue, with just an idea. And that has completely changed since now. So right now, in the bear market, investments are far and few between. We're looking at stuff such as repeat founders or even companies that can generate revenue. So some of the 3 questions that we've been asking the founders a lot these days is that, 1, how are you onboarding users into your platform? How are you going to get users? That is really important. 2, if you are developing a protocol, who is going to build on it? Are engineers going to build on it? Can you even recruit engineers to come in and build? And then 3 is, how are you going to drive revenue? Right now, between Web 2 and Web 3, the revenue multiples are pretty different. Web 3 companies can command multiples up to 50, 100x during the bull market, whereas in Web 2, I think TSMC is trading at about 10x sales multiple right now. So 2021 was a historic year for developers. This is something that we believe Web3 is still quite new, just because we have seen that between the developers in Web 2 and Web 3, it's such a big difference. So I'll get into that later. But Web 3 has seen a huge uptick in developers in 2021. Most of the developers right now are still part-time. And what we have seen in Silicon Valley is we have seen that quite a lot of Web 2 companies are losing their engineers into Web 3. You guys have probably seen the articles out from Bloomberg saying that a lot of the Web 2 companies, engineers are leaving to start Web 3 projects. And a lot of them right now are even doing part-time Web 3 development. A lot of developers have actually branched outside of ETH and BTC to develop. So as you guys know, there's a lot of new layer ones coming on, from Solana to Sui to Aptos. Aptos just launched their token. And Web3 developers have actually retained a lot of consistency. So despite the headwinds, because of the bear market, this year in 2022, 30% of all verified smart contracts are still deployed this year, which means that even though we are in a bear market, their builders are still out there building and still developing. dApps are being developed faster than ever this year. Year-to-date growth for Polygon has gone up 335% in developer teams, and then the API consumption has also gone up quite a bit. Solana is another layer one that is grown by over 1,000%. So there is so much runway still ahead. Right now, there is an estimated 30 million Web 2 developers out there, compared to only 300K Web 3 developers. Now, we're saying that it's 300K is because most of the Web 3 developers are actually coding in multiple languages. So the estimated Web 3 developers out there is actually about 600, but because we believe that most of them are coding in 2 languages, we feel like that it's about 300,000. So what do we look for when we invest between Web 2 and Web 3? For Web 2, for us, it must have product market fit. It needs to be the market leader, and most of the time we're dealing with safe or equity deals. Now, in Web 3, that's changed a lot since the bull market. For us, most of the agreements that we were doing in the beginning of the bull market were SAFs, simple agreements for future tokens. But with a lot of companies not knowing if they are even going to be launching a token, we are now pushing most of our investments into safes with token warrants. Now, we say that is because right now we have no idea where the value accrual of the revenue is coming from. For example, a lot of companies that are launching a token, most of us have invested in SAFs, but what if the value accrual of the revenue goes into the equity and not into the token itself? So anybody that invested in the token, we have no idea how the token will even go up or sustain its value. So most of the investments that we're making these days, we are asking for safe with token warrant, just in case the token that they launch is not successful. So what does it mean for a VC firm to invest in tokens? Now, you can say tokens are basically shares in the company. Most of the time, if we are doing token investments, the project will sell about 20% of their tokens to investors. They themselves, the team, will probably keep 20%, and then the other 60% will go into marketing. Now, you can assume that if you're investing in a token company, because they're only selling 20% of their tokens, one, that means that you're not going to get diluted. Between first round, seed, private, A or B round, there is no dilution because they are selling tokens and not equity. Now, this is one of our first investments. Actually, this is the first investment that we did. And YGG is the example that we decided to use today. So right now, if you're investing in a token company, you'll most likely get 5–10% unlocked during TGE. What does that mean? That means that upon the listing of the token, you're going to get anywhere between 5–10% unlocked. And for YGG, because this company was built about a year ago, they unlocked 20%. But we don't see that anymore in any of the companies that we're investing these days. So why would a company sell tokens? One, lower barriers to entry, faster liquidity, and targeted fundraising. So like I said before, there is no dilution when a company sells tokens. And two, most token companies actually list a lot faster than companies that are in equity. So the normal times for a company to go public for equity company is anywhere between 5 to 7 years. In Airbnb's case, it was 14 years. But for most token companies, they list within 1 year. So tokenomics describes the mechanism of how the asset works and the psychological or behavioral forces that could affect the token's value long term. So sometimes when people list their tokens, we ask them, why would anybody buy your token? And if you even need a token. So one of the things that we really dig into with our companies when we invest in them and they have a token is that, do you really need a token? Will people buy it? Is it something that is needed for your project? And what we saw in the bull market was that everybody was doing a token for their project when they might not need it. And then now, in this bear market, most of them are thinking, should we launch a token or not? Because tokens have dropped 60, 70, 80% in value from the peak. So that's it for me. Thank you very much.
네, 발표 감사합니다.